Imagine working your entire adult life toward a specific goal. You follow the rules, you get a university education, perhaps as an engineer or a teacher. You secure a government job or maybe a mid-level position in the private sector. You save for a down payment on an apartment in Tehran or Isfahan. You take a modest vacation once a year. You are the definition of the middle class. You are the backbone of a modern society. Now imagine that one morning you wake up and the savings in your bank account have lost 10% of their purchasing power overnight. By next week, another 5% is gone. Within a year, that down payment you saved for a decade can no longer buy an apartment. It can barely buy a used car. This is not a hypothetical dystopia. This is the daily reality for tens of millions of people in Iran. It is a story of economic violence so acute that it has effectively wiped out a social class that took generations to build. To understand the scale of this tragedy, we must understand what the Iranian middle class represented. Historically, Iran has always had a robust merchant class, the bazaars. But the 20th century saw the rise of a modern, salaried middle class, educated professionals whose status was defined not by owning land or capital, but by their skills and their regular income. Even after the 1979 revolution and the devastating 8-year war with Iraq, this class persisted. They were the engine of the country's reconstruction. Through the 90s and the early 2000s, despite political turmoil, there was an economic trajectory that many could buy into. If you worked hard, your children would have a better life. There was even a brief moment of genuine optimism in the mid-2010s. The signing of the JCPOA, the nuclear deal, promised to reintegrate Iran into the global economy. Inflation, which had plagued the country for years, was briefly tamed, dropping into single digits during the first term of President Hassan Rouhani. The exchange rate stabilized. The middle class breathed a sigh of relief, believing that the currency in their pockets was finally real money. That belief was an illusion. The stability was built on sand, waiting for a geopolitical tide to wash it away. The tide arrived in 2018. The United States unilaterally withdrew from the nuclear deal and reimposed maximum pressure sanctions. The explicit goal was to cripple the Iranian economy, to force political concessions. The economic goal was achieved with devastating efficiency. Almost overnight, Iran's primary source of foreign currency, oil exports, was severed from the legitimate global banking system. When a government's revenue collapses, but its expenses, salaries, pensions, subsidies, and military expenditures remain high, it faces a stark choice: cut spending radically, which risks immediate social unrest, or print money to fill the gap. The Iranian government chose the latter. The Central Bank of Iran began expanding the money supply at breakneck speed to finance government deficits. This is the classic recipe for hyperinflation, too many rials chasing too few goods. But to truly grasp the catastrophe, you have to look at the scoreboard of the Iranian economy, the exchange rate between the Rial and the US dollar on the free market. In 1979, just before the revolution, one US dollar traded for roughly 70 Rials. By 2017, before the nuclear deal collapsed, it was trading around 35,000 to 40,000 Rials. That was already a massive, decades-long devaluation. But then the floor fell out. As sanctions hit and confidence evaporated, Iranians rushed to convert their rials into anything that would hold value: dollars, euros, gold. By late 2022 and into 2023, the exchange rate crossed terrifying psychological thresholds. It broke 300,000, then 400,000. By early 2024, the open market rate hovered in the agonizing territory of 550,000 to 600,000 rials for a single US dollar. Think about that math. If you held on to cash from 2017 to today, you lost more than 90% of your wealth in dollar terms in just a few years. According to data from the Statistical Center of Iran, annual inflation has consistently hovered above 40%, sometimes spiking nearly to 50% for several consecutive years. In food staples, the inflation is often much higher. The price of meat, dairy, and rice, the absolute essentials of an Iranian table, has doubled, tripled, and quadrupled in short cycles. For the salaried middle class, life became an impossible arithmetic problem. Their incomes, often fixed by government contracts or stagnant private sector wages, increased by maybe 20% a year, while their costs rose by 50%. The result was an immediate contraction of lifestyle. First, you cut luxury items, then you cut vacations, then you delay replacing clothes. Then you start downgrading your diet, eating less meat and more carbohydrates. The most painful squeeze came in housing. In major cities like Tehran, rents are pegged to the reality of asset prices, not local wages. Reports from Iranian media outlets indicate that in many areas, rent now consumes upwards of 70% of an average family's income. This forced a mass migration out of city centers. Families that had lived in central Tehran for decades were pushed to the exurbs, adding hours of commuting to their already exhausting days just to keep a roof over their heads. The middle class didn't just slide into poverty, they were jettisoned into it. We have now arrived at a new, darker economic reality. The traditional definition of the middle class in Iran is functionally dead. What remains is a deeply polarized, two-tiered society. Hyperinflation does not destroy wealth uniformly, it redistributes it violently. The death of the middle class was accompanied by the enrichment of a new elite. In an inflationary environment, cash is trash, but hard assets are king. Those who had capital before the crash, those who owned real estate, held foreign currency accounts abroad, or had access to cheap government loans to buy gold, saw their net worth skyrocket in Rial terms. The Tehran Stock Exchange experienced a bizarre, record-breaking boom in 2020, right in the middle of the deepest recession. Why? Because it was an asset melt-up. People were terrified of holding cash, so they bought stocks at any price just to own something other than reals. This created a chasm of inequality. On one side, you have asset holders whose property values have kept pace with the dollar. On the other side, you have wage earners, the former middle class, whose labor is now worth pennies globally. Independent estimates and reports from Iran's own Parliamentary Research Center suggest that the poverty line has swallowed a massive chunk of the population. Depending on the metric used, anywhere from 1/3 to over half of the population is now struggling to meet basic needs. The psychological toll is perhaps the most lasting economic damage. A middle class requires faith in the future, the belief that saving today yields rewards tomorrow. Hyperinflation destroys the concept of tomorrow. It forces an entire society into a short-term survivalist mindset. You spend money as soon as you get it because holding it is a risk. You cannot plan for retirement. You cannot plan for your child's university. This reality has accelerated a massive brain drain, as the brightest engineers, doctors, and academics, the very people needed to rebuild the economy, leave the country, realizing their skills are virtually worthless inside Iran, but highly valued outside of it. The tragedy of Iran's economy is not just numbers on a chart. It is the systemic dismantling of the promise that hard work leads to stability. The middle class did not fail. They were failed by a toxic combination of external economic warfare and internal mismanagement that sacrificed their future to ensure the regime's survival.